So after being self-employed for a little over 5 years with no additional W-2 income, Molly and I finally purchased our first house a couple months ago. And if you are self-employed, I'm sure you can relate heavily to all of the criticism and negativity surrounding purchasing a home as self-employed. We definitely experienced it over the years, and so today I wanted to kind of give you a few tips and things that we learned along the way just to ease your mind, because it actually ended up being a much simpler process than we ever could have imagined. To give you a little bit of background about Molly and I and the home purchase that we recently had, it was in January of 2021 during the pandemic, which, as you know, has caused a little bit more scrutiny on the self-employed individuals, but I can go ahead and tell you that all it meant was signing a couple more papers, and that was literally it. Molly and I purchased a $292,900 home with only a 3% down payment, a 2.82% interest rate, and on top of that, we had our closing costs covered by the seller. So our total out-of-pocket cost was somewhere between $8,000 and $9,000 to get into nearly a $300,000 house, and it was actually pretty darn easy. This is something that I've been wanting to talk about for a long time. I've been writing a very long blog post ever since we purchased the house for everything that we learned, and hopefully in the future I'll come out with an even more extensive video than this one, but I wanted to get something out to give you guys some tips to get started. So tip number one may seem really obvious, I know, but it's make a game plan. Okay, so Molly and I had a game plan for nearly 2 years leading into purchasing this house, and a lot of that had to do with an unnecessary amount of anxiety about the actual buying process, which ended up, like I said at the beginning of the video, to not be the case. But ultimately, the game plan really helped pay off because we were well educated going into the buying process, and we were also really prepared financially to be able to make the purchase. Don't let 2 years scare you off, because you may be in a much different place than we were 2 years ago, because honestly, we were still living by the seat of our pants 2 years ago and just sort of winging it as we went. So we've made major life changes and financial changes over the past 2 years that you may be well ahead of us in that area. So it's not something that has to take that long, but everything that I talk about in this video, I want you to wrap up into that game plan. So the tip number one is kind of an encompassing thing around the rest of the tips, just to be able to do the research on these other areas and be prepared and be thinking about it well in advance, because that ultimately is going to help you out more than anything else. So tip number two is actually understanding fully how home affordability works from a lender's perspective, because they're the one lending you the money. So whether or not you believe you can afford something is pretty irrelevant based on some simple math that most lenders go by, which is typically 30% of your gross monthly income is what you can put towards your actual mortgage payment. And typically they're going to reduce that amount by your actual monthly debt payments to things such as a car purchase or student loans of that nature. I'm going to leave a link in the description where you can check out a calculator so that you can calculate your exact home affordability really easily. This seems like a really obvious tip, I know, but there's so many factors that play into what your actual monthly payment ends up being for a house that can greatly dictate what house you actually go with and what price point you go with. So depending on how much you have to put down, depending on the actual location, because taxes may be higher in town versus out of town. There's also things to consider like the age of the house. So if you're going to get a house that is to a gold fortified standard, you may save as much as $50 to $100 a month on your insurance, which doesn't seem like a lot, but that could be $20,000 to $50,000 more house that you could actually afford to own just by knowing that little side tip going into it. So you really want to look at all the factors that make up the monthly payment for your house so that you can decide whether or not you're A, going to be able to afford it, or B, what you could do to potentially make a house look even better for a lender. Because if you show up to the table with a house that is only going to use 15% of your gross monthly income, well then it's pretty obvious that you're going to be able to easily afford that instead of walking up to the table and saying, hey, I want to buy this house at 40% of my gross monthly income. So tip number 3 is to sit down with your accountant and have a conversation with them and tell them that you plan on purchasing a house within the next year, 6 months, 2 years, preferably at least a tax year in advance, so that y'all can make decisions based on that. Because a lot of times an accountant's job is to hopefully save you money on taxes, and that can often lead to your individual tax return looking pretty dry compared to the rest of your income, which can hurt you in the home buying process. For instance, if last year you were to go and finance a brand new $60,000 truck for your business, because you know what, that's going to save you $15,000 in taxes, we're going to go ahead and write the whole thing off this year. Well, that's $60,000 less income on your individual tax return this year, which ultimately is going to let the bank think that you don't make nearly as much money. Now, there are ways to add those purchases back in, but it's something to consider, and I'm oversimplifying by a long shot here, and if you're in the boat of making these larger purchases, you will know already what I'm talking about, but it's part of the home buying process, and really if you start making a game plan in advance, you can figure out ways to make that look better for the lender. So, simple things like, okay, instead of fully expensing this year, we're going to expense it over 5 years. Or instead of making this purchase this year, I'm going to hold off for 6 more months because I know I'm going to buy a house, and I'll make the purchase after the home buying process is done with. Because those things can greatly increase or decrease the amount of friction you have when you're actually going through the lending process. It's not the end of the world if you need to add some of those assets back in. It can be done, but you're going to need a professional's help for sure to do that the right way. The 4th tip I have is by far the most commonly suggested tip for any part of home buying, and that is to focus on your credit score. And the reason I mention this, even though it's super cliche and the most obvious one, is because there's a lot of things that you can do within 6 months to a year to boost your credit score. If you're willing to do the research and learn as much as you possibly can about the way credit scores actually work, because there's so many myths out there when it comes to credit scores, you can do a lot to boost your credit score before you go into the home buying process. You just have to be prepared to do it and have a little bit, again, of a game plan. To give you a good example of this, Molly had a 720 credit score about a year out from us deciding to buy a house, and what we did in order to go ahead and boost her credit score was we actually opened a separate PayPal credit account. We put all of our owed estimated taxes through that and then just paid it off. But what that does is it opens up another line of credit. It shows payments on time. It increases her total available amount of credit, and her credit score from doing that one thing, even though there's a small dip at the beginning, by the time a year had passed and we were ready to buy our house, her credit score peaked at 782 at just 24 years old, which is a really good credit score for that age. And it's because we've taken a lot of time to understand the way they work and to hit them at their absolute peak, right as we were applying for our loan. And if you don't think it makes that much of a difference, I will refer back to the home affordability. Your credit score will be a big determining factor as to how much house you can afford. Because if your credit score only allows you to get a mid-tier interest rate, your monthly payment is going to go up. Because we had over whatever the highest credit thing is, a 750 usually, we were going to get the best interest rate possible. And because of that, we lost no money in our affordability. Even if we were going to only have 1% more because we didn't do the PayPal credit deal and didn't play that into advance, and her credit score was 720 instead of 782, that 1% would have pushed our total use percentage of our gross monthly income up a decent amount. And if you were looking at a house that you really loved and you just didn't quite have the interest rate 1% down, that could be the determining factor as to whether or not you can afford the house. So it is really important, and just because you have decent credit doesn't mean you can't have phenomenal credit if you just put in a little bit of work. And so what I'm going to do is I'm going to leave a link in the description to a video that's going to take you through basically step by step, and you can just check out the whole channel, and they're going to tell you basically everything you need to do to build your credit, because it's beyond the scope of this video. But I highly recommend that you don't skip out on this or just assume that your credit is good enough because it's better than most people's. You can make it better by doing very simple things in pretty short periods of time. So the last tip I have, and hands down the best tip, is you need to find a really good loan officer to have in your court. You need to look for someone, preferably local, who deals with self-employed people on a regular basis. Maybe ask another one of your self-employed friends, or just in general ask for recommendations, and actually set up meetings with people before going through any sort of loan process with them, and find someone that you really like and you feel like they're gonna be there for you during the whole process. This made our process way easier. We had someone who was willing to take a phone call at any time of the day, and they also had an in-house person who was actually looking through all the documents that we were providing to underwriting and actually screening them prior to them going to underwriting and deciding, what things they may ask for, and having all of that ready to produce before they ever even needed it. So whenever we actually submitted and got our contingent approval, at the end, the only thing they needed for final approval was 2 bank statements. They didn't ask any other questions than that. We were able to give them everything that they would have ever needed up front without having to go through this back and forth process by doing and having a good loan officer on our side. It made all the difference. And do them a favor, this is, I guess, the 6th final tip. Do them a favor, whenever they ask for things, be very organized. Have the file name represent what the file is, and do your very best to have things all the same file types, not JPEGs and PDFs. Just take time to make things really well organized and easy for the loan officer, and then ultimately it will be easier for the underwriter and will make your process much smoother and simpler. Well, that's going to wrap up this video. I hope you guys enjoyed it and found it somewhat useful. I do plan on having a pretty extensive video come out that shows you a lot more in detail about what I talked about in this video, as well as a very in-depth blog post. So look forward to that in the future. And if you are interested in this kind of stuff, please leave a comment down below letting us know, because this is kind of like a brand new topic on the channel, and we would like to know if people are interested in hearing more about it, because we learned a ton during this process. Lastly, before you go, if you guys are at all interested in DIY projects, I highly recommend you check out the Woodbrew guides. They're a brand new product. They have a lot of really cool features built in, one of which is the ability to actually DM us directly through the guide and ask questions while you're going through your project. So next time you have a DIY project on your mind, be sure to check out the Woodbrew guides, and you might be able to find something of use over there. We appreciate you guys' support, and thanks for watching.